Welcome back, everybody. Today we're going to be doing a stock analysis. We're going to figure out how to pick a stock, what to look for in a dividend stock specifically. We're going to look at ETFs, how to compare ETFs, and how to make the best decisions when investing and trying to figure out how to receive the most investment income we can down the road. So, first things first, like always, 20 bucks here into the portfolio per video. This is something that I sort of made the commitment in doing for myself, obviously, but also so you guys have something to follow along and do. So if you want to go ahead and put in 20 bucks or 10 bucks or 5 bucks in your own portfolio and do it every time I post a video like I'm doing here, then we can kind of see the same level of growth. Hopefully you guys can add more than that. Hopefully you guys can add more than me. If you want to put 100 bucks in your portfolio, put 100 bucks in. Just make sure, you're being cautious. You're only putting in what you can afford to put in, only risking what you can risk, because the stock market is ultimately a risk for everybody. With that being said, let's look at these stocks here. So I've kind of left my portfolio open ended. So I took everything out of here, but what I did is I left portions of shares in each one so I could still have my tickers here in place. So I, wouldn't forget what I was invested in anyways. And I thought that it'd be a good starting point for this YouTube channel to have a place for you guys to kind of mimic. And so if you wanted to buy into these exact stocks, that would not be a bad decision in my opinion. So I'm also not a financial professional. I am completely figuring things out as I go, have been figuring things out as I've gone for many years now. So, but I think that these are all pretty great holdings. And yeah, so if you wanted to mimic these, that'd be a really good starting point for someone just kind of starting out. If you're not starting out and you have all sorts of other stuff, that's pretty cool too. If you wanted to dwindle back to something really simple even, you could come to something like this. And that'd be really great too. You'd have a lot more maybe money delegated to fewer positions, but all kind of doing an awful lot, So this is a pretty good starting point for anybody, I think, and it's where I'm going to be starting here on this channel. So looking at dividend stocks, we want to be as tactical as we can be. And really what I mean by that, without diving too far into analyzing, because there is just absolutely so much research you can do looking at stocks and figuring out what's what, where have they been, where are they going, what's the latest news article, what is the media saying, what are they saying. All of it is just a lot of information. So if you have the time, I definitely recommend, especially if you're looking at new stocks and kind of experimenting, definitely do as much research as you can. I think that sort of goes without saying, but some of the important things, if you're just starting out, to look for in a dividend paying stock is you want to see that it does pay a dividend. And, not to say that other stocks that don't pay dividends can't have their time and place or be a permanent structure in your portfolio. They certainly can. And they certainly can pay off an awful lot. Companies like, Tesla and previously Facebook, until they started paying a dividend, were kind of stocks that you could see growth in and invest in and really expect and trust that, yeah, there was going to be overall growth as time went on. So, but if you're kind of having the mentality of, hey, I want to invest for a really long time and receive dividends and live off dividends, 20 years down the line, or whenever you're 60 or whatever your goal might be, you're going to want to have a dividend focused portfolio ultimately. So when you look at a dividend stock, you see that it pays dividends. You're going to want to look, the number is great, okay, But you're going to want to look at your annual dividend yield. And this is sort of where the pitfall, sort of is. A lot of people will start seeking out this higher percentage dividend. And, you'll see 7% sometimes. You'll see 6%. You'll see 5%. You'll see a lot of higher numbers than, 297 here. And that can be a trap in a lot of different ways. So if I were to give you just my personal recommendation, something that I'm sort of, I sort of stick to is a sort of like a 4% rule. If it's 4% or higher, I'm really kind of questioning it. I don't think I have a single stock here in this portfolio right now that's at a 4% or more. And you can do your own research, and maybe I'll do a video in the future as to, why that, you should be a little bit cautious with dividend paying stocks that have a really high dividend yield. But for now, do your research, take the deep dive, figure out what you can. If you're someone who's just getting into this and you don't feel comfortable with a lot, definitely spend the time to figure out and make yourself feel that comfort that you need to feel. So back to the portfolio, J&J, JP Morgan Chase, SCHW, Union Pacific, UPS. These are really great dividend paying stocks. I recommend you having positions in all of these. Let me know which ones you like the most. Let me know if there's other dividend paying stocks that aren't listed here and that you really believe in. Okay, moving on to ETFs. This is where things get a little bit interesting. This is where a little bit of growth happened for me, and I definitely think that this is really important to long-term success in your portfolio here. So we're going to use a little tool over here. This is at etfrc.com. This is a ETF comparison tool. You can compare ETFs essentially, so SCHD and DGRO. So you'll see here, those two ETFs that I have in my portfolio, they don't have much of an overlap, and that's what you want to see. You want to know that you're putting money into totally different segments of the market, and with as much of a minimal overlap as possible. You can have more than two holdings, more than two ETFs in your portfolio for sure. You could have 10 if you wanted to. But the way that these two ETFs work is one is sort of more of a growth ETF and one is sort of a, easy does it, steady goes kind of ETF. So if you wanted to do something like, if you wanted to add like VOOO to this little trifecta, maybe there's a better one that I can find that's, a little bit less than 40%, but, it doesn't have, this is, 45% with DGRO, but its SCHD comparison is only 8%. So it's pretty good when compared to SCHD. So if I wanted to add something like that to this portfolio, it probably wouldn't be that bad. I'm not too sure. Let's look at SPY. SPY 8% with SCHD, DGRO. It's just a matter of finding this stuff. So 45% again. So what is SPY and VOO? Let's see what their comparison is. So they're 100%. Okay, I don't even know. Maybe this is. I guess they're both in tech, both covering a lot of the same ground. So you definitely wouldn't want to have SPY and VOO in the same, you're only two. So something like this is a little bit more beneficial. And like I said, one's a little bit more growth and one's a little bit more steady. And if you're a younger individual like me, I'm 30 years old, you're probably going to want to have a little bit of a lean towards the growth, be a little bit more aggressive for a longer period of time until you're older and you're starting to live off of your $1 million here. So you'd want to switch eventually and delegate your money and reposition things and figure out what's better for you in that season of life. So I hope you guys enjoyed today's video. There's not quite enough cash in here off my $20 today to be able to go into another position on here. So I'll just wait till this gets a little bit bigger and I'll show you guys that transaction in the future.